Understanding and even investing in the stock market does not have to be rocket science. Even though the markets have performed very poorly through the first 4.5 months this year, investing in the stock market is still a great opportunity for you to build wealth over the long term. Did you know that looking over a 20 consecutive year period, any combination you take of any 20 consecutive years in the S&P 500, it has never come out with a negative outcome? On this channel, you know that I love talking about dividend stocks, but not every portfolio and not every investor is cut out to have individual stock risk. In fact, the mere foundation of any portfolio, whether you are a growth investor or a dividend investor, should be built on ETFs or index funds. For those of you unaware, ETF stands for Exchange Traded Fund, and just think of it as a basket of stocks. It could be a small basket where an ETF maybe is sector focused and only holds maybe 40 different positions. Or it can be a very large basket of stocks that holds maybe 100 or even thousands of different stocks. Think of a total market index. As such, in today's video, I'm going to be breaking down 5 top dividend ETFs for you to consider for your portfolio. These ETFs invest in some of the best dividend paying stocks on the market today, and they will pay you passive income just like a regular individual dividend stock does as well. But before we jump in, do me a huge favor and click that like button down below, as I truly appreciate it and it really helps the growth of this channel here. Also, if you're looking for a great new investing platform, then consider M1 Finance. It's a platform that I use personally, but it's also great for buy and hold investors. So if you click down on the link below and sign up for a new account, they will give you $10 free just to get started. With that being said, let's jump in. Thanks again for joining me today. If we have not met yet, my name is Mark Rusin. I'm a CPA and not a financial advisor, so please perform your due diligence before investing in any stock or ETF mentioned in today's video. And please do not take this as financial advice. All right, let's dive into my 5 top dividend-focused ETFs for you to consider for your portfolio, and we will go through them in order based on the highest dividend yield all the way down to the lowest dividend yield. The first dividend ETF we will go over today is the iShares Core High Dividend ETF, stock ticker HDV. This ETF seeks to track the investment results of the Morningstar Dividend Yield Focus Index, composed of relatively high dividend-paying U.S. equities. The ETF currently has a dividend yield of 3.2%. Looking here over the past 10 years, you could see that the HDV has returned roughly 89% over that 10-year period, which equates to an average annual return of 8.9%. The expense ratio is currently 0.08%, meaning that if you invested $10,000 in the first year, you would have to pay a total of $8 for this passive ETF. Again, the return has been 8.9% per year over the past 10 years, meaning that if you invested $10,000 and compounded that every single year for 10 years, that $10,000 would now be worth $23,462. Now let's head over to the top holdings for HDV. You can see that the top 10 holdings make up roughly 52%, and they are comprised of higher paying dividend stocks. So you're going to get a little bit less growth, you're going to get less dividend growth, and you're not going to have as high of dividend, or I should say stock appreciation, as you will in some other stocks. But we have ExxonMobil, AbbVie, Johnson & Johnson, JP Morgan, Chevron, Verizon Communications, Procter & Gamble, Philip Morris, Merck & Company, and rounded out the top 10 is Coca-Cola. So again, this ETF has 81 different positions you can see, and the top 10 makes up a little over 50% of the total ETF. Again, with an ETF like HDV, who is focusing more on higher yield dividend stocks, you're not going to have huge dividend growth rate. But just to look at that, over the past 5 years, you can see that the dividend growth rate has been 4.34%. The second dividend-focused ETF we're going to look at today is one of my favorites, and that is the Schwab US Dividend Equity ETF, stock ticker SCHD. This ETF seeks to track as closely as possible the total return of the Dow Jones US Dividend 100 Index. As you can see, over the past 10 years, much more impressive growth in terms of the ETF when compared to HDV that we just looked at. That one's focused on more reliability, safety, so it's not going to get a ton of growth, but with this one, you're going to get a good mixture of different dividend-paying stocks. You're going to have some lower yield, but higher growth opportunities, as well as some higher yield and lower growth opportunities. But we're going to take a look at those positions here in a second. But over the past 10 years, you can see that SCHD has grown 183.56% over that period, which equates to an average annual return rate of 18.35%. Again, this does not include any dividends yet as well. The current dividend rate is 2.97% is the current dividend yield. And again, if you invested $10,000 10 years ago in SCHD, that money would now be worth $53,940. The expense ratio is very low at 0.06%, meaning that $10,000 investment would equate to an annual expense fee of only $6. Next, let's take a look at the top holdings for SCHD. As you can see, the top 10 holdings make up 40.6% of the entire ETF, and those are comprised of Merck, Coca-Cola, Pepsi, Amgen, Pfizer, IBM, Texas Instruments, the Home Depot, Broadcom, and Lockheed Martin. In totality, the fund has 104 total holdings. Turning our attention to the dividend, we have a current yield of 2.97% and a forward yield of 2.7%. But as you can see here, and as I mentioned before, this SCHD fund focuses on a wide range of dividend-paying equities. You have your higher growth or dividend growth stocks, and you also have some safer, higher yield dividend stocks. But as you can see, the 5-year dividend growth rate is much higher than that HDV we just saw a second ago. And the mix is why I love SCHD. So you have a 5-year dividend growth rate of slightly under 12% per year. The third dividend-focused ETF is the Vanguard High Yield ETF, stock ticker VYM. This investment seeks to track the performance of the FTSE High Dividend Yield Index that measures the investment return of common stocks of companies that are characterized by high dividend yields. As you can see, over the past 10 years, shares of VYM have returned 133%, which equate to an average annual return over that period of 13.3%. Had we invested $10,000 in VYM 10 years ago, that would now be worth a total of $34,925. The current dividend yield for VYM is 2.87%, which is very respectable, and you could see a very low expense ratio of 0.06%, meaning that $10,000 investment again equates to an annual expense fee of $6. And let me quickly just pause and tell you what this expense ratio or expense fee is. You'll see these on all types of ETFs. ETFs are usually either going to be passively managed, which means they're just going to follow an index and they're just going to mirror it. So if you have an S&P 500 index, you'll have an S&P 500 ETF that's just going to mirror what that is, so you can track that. So there's not a lot of managing that goes into the ETF itself. But you'll also have actively managed ETFs. Think of Cathie Wood and the ARK ETFs, ARKK, which are performing terribly, but you're going to have high expense ratios of 0.75%. So that $10,000 investment in something like ARK would equate to a $75 annual fee each and every year. And as you can see, that ETF is just getting hammered, but it's also more actively managed. They're trading in and out of stocks each and every day. So again, all of these dividend ETFs that we're talking about today, they're all passively managed. So you're going to see very low expense ratios that are going to be below $10 a year. Next, let's take a look at the top holdings of VYM. So again, similar to our first ETF that we looked at, HDV, which was the high dividend yield ETF, this one also focuses on higher dividend paying stocks, higher yield dividend paying stocks. So as you can see, our top 10 holdings make up roughly 22%. So this ETF is much larger. It's a larger basket of stocks, as we have 448 different dividend positions in this ETF. In terms of the top 10, we have Johnson & Johnson, JP Morgan, Procter & Gamble, ExxonMobil, Chevron, the Home Depot, Bank of America, Pfizer, AbbVie, and Broadcom. In terms of the dividend, again, this one's focused a little bit more on higher yielding dividend stocks. So we're not going to get a ton of dividend growth stocks, but looking at that top 10 holdings that we just looked at, we did see some dividend growth stocks. Bank of America is one that comes to mind. But over the past 5 years, you could see that shares of VYM, the high yield dividend ETF, have increased their dividend an average of 7.05% per year. The fourth dividend-focused ETF we're going to look at today is the iShares Core Dividend Growth ETF, stock ticker DGRO. Again, this is another one of my favorites and one that I personally invest in myself. As you know, and if you've watched this channel for long enough now, you know that I love focusing on dividend growth stocks. Being someone that has a long runway, hopefully I have a long runway ahead of me, I want to focus on those companies that have higher growth potential, but they're also increasing their dividend each and every year at a very strong clip. I'm looking for dividend growth of over 10%. That's what I consider a dividend growth stock. So this ETF is going to focus more on those companies that are not only paying a dividend, but they're paying an increasing dividend. They're increasing at a strong clip each and every year. The iShares Core Dividend Growth ETF is an investment that seeks to track the investment results of the Morningstar US Dividend Growth Index. As you can see, over the past 10 years, DGRO has returned a little over 100%, meaning that the average annual return rate has been 10% per year. Had we invested $10,000 in this fund 10 years ago, that money would now be worth a total of $26,475. Looking at the expense ratio, again, a passively managed ETF, which means it's just mirroring an index, not a lot of trading in and out, just a couple updates throughout the year. This one has an expense ratio of 0.08%. So a $10,000 investment would equate to an $8 fee per year. The ETF currently has a yield of 2.14% looking back over the past 12 months. In terms of the top holdings, the top 10 holdings currently make up 25% of the entire ETF. And again, this is a very large ETF, similar to the one we just looked at a second ago, as this one has 422 different dividend-paying stocks in this ETF. The top 10 are made up of Johnson & Johnson, Microsoft, Apple, Procter & Gamble, Pfizer, JP Morgan, Merck, Coca-Cola, Home Depot, and PepsiCo. In terms of the dividend, again, this is a dividend growth focused ETF, but if you remember, my favorite one that we went over was SCHD, the Schwab US Dividend ETF, which was really a broad-based, focusing on some dividend growth, some higher yield, but it still had a very strong 5-year dividend growth rate. Now, this ETF is focused on dividend growth and still doesn't have the growth rate to match SCHD, but still a very respectable 10.2% dividend growth rate over the past 5 years for shares of DGRO. The fifth and final dividend-focused ETF we'll take a look at today is very similar to the one we just looked at, and that is the Vanguard Dividend Appreciation ETF, stock ticker VIG. Again, VIG is very similar to that of DGRO. DGRO is iShares' version of dividend growth ETF, and VIG is Vanguard's version of a dividend growth focused ETF. You'll see some similarities in the top holdings that we're going to take a look at here, but there's also many differences as the results aren't exactly the same. As you can see here, over the past 10 years, VIG has returned 167%, meaning that the average return over that period is 16.7%. Had we invested $10,000 10 years ago in VIG, today that would be worth $47,026. Also, you can see a very low expense ratio at 0.06%, meaning a $10,000 investment would equate to $6 in fees per year. The current yield, looking back over the past 12 months, is roughly 1.9%. Taking a look at the top 10 holdings, you can see that the top 10 holdings make up 28.8% of the entire ETF, and this ETF has 291 different dividend-paying stocks in it. Those are led by Microsoft, United Health Group, Johnson & Johnson, JP Morgan, Procter & Gamble, Visa, the Home Depot, MasterCard, Broadcom, and Costco. Lastly, let's take a look at the dividend stats. Again, you could see that we had a dividend yield under 2%, but over the past 5 years, again, this is a dividend growth focused ETFs, but yet we're still seeing dividend growth that's below SCHD, the Schwab US Dividend ETF, which isn't just focused on dividend growth stocks, although it has some great dividend growth stocks up near the top, which has given it a strong dividend growth rate over the past 5 years. But shares of VIG have a 5-year dividend growth rate of 9.06%. So there you have it, folks. You have 5 dividend-focused ETFs. We had HDV, which is going to be focused more on higher yield. So if you want to look for that safer, more consistent ETF that's not going to be as volatile, then definitely take a look at HDV. But if you were going to ask me, Mark, what's your favorite dividend-focused ETF? It's definitely going to be SCHD. I think it's a well-rounded ETF that's focused on dividend growth, but high-quality dividend-paying stocks. It has a very strong track record, and it also has strong dividend growth rates. For the ones that I invest in personally, SCHD obviously, as well as DGRO are 2, and also VYM for some higher yield as well. So 3 of these 5 I invest in personally. But I just wanted to lay out different options for you. You had 2 dividend growth ones that are focused. You had a well-rounded ETF, and then you also had a couple ETFs that are focused on higher yielding dividend paying stocks. So definitely in the comments section down below, let me know which of these 5 dividend focused ETFs are your favorite. Or if you have another one that I didn't discuss today, drop it down in the comments section below. I would love to hear what you think is a great dividend-focused ETF. Also, if you haven't done so yet, again, please hit that like button, as that is huge for the growth of this channel moving forward. As always, I thank you so much for watching, and we will see you next time. Take care.